Good day, everybody. It's Dr. K and Gil Morales. Let's get right to the market action. We know that today it was reported that one Fed member is warning against being hasty on tapering QE. That's quantitative easing. And he cites low inflation. Therefore, they have room to maneuver and not be hasty about it. But another member says that tapering should start in September, which is the month of their next meeting. So this creates what we call a schizophedic market effect. As a number of dissenting views create these cross currents in the market, which translates into volatility. We see that bonds have been in a downtrend for months, and stocks seem to be at a tipping point for a more prolonged down. And we are forward looking to buy months. Said positive action in stocks today, such as in Facebook and Q-Core, are plus for the market finding its footing, though on the end of the come quite a bit. In precious metals, we see that gold and silver continuing uptrends.
Oh, breaking up a little, Dr. K.
Okay, saying that seeing their uptrend in today's action, and this is most likely due to further evidence of economy. As we know, China exerts huge demand on goods and services and raw materials, bodes well for the world in general. And so the U.S. market finds its footing in here. The market direction model would switch out of its short-lived sell signal and most likely back to a buy signal. But that still needs to be seen. There's not enough evidence yet. The market looks like it's trying to find its footing, but it is also in a downtrend which started about 3 weeks ago. Now, QE may get tapered in September, October, or December. The Fed has said it's going to be one of those months, and so present the 3 remaining Fed meetings this year. But evidence that world economies are turning the corner could override the tapering effect, the negative tapering effect that would have on stocks, and thus push stocks higher. But on the other hand, one could argue that the U.S. market is already at very high levels, artificially helped by QE since 2009, and that the tapering way for the economy, in other words, any tapering would probably bring stocks down if that scenario proves regardless of Dr. K. Okay, I hear I'm picking up out of the way. Let me try something here. My internet is absolutely fine.
I kind of heard what you were saying. I can.
How am I now?
It's still coming in and out. It's coming in and out. I was thinking maybe you were still on the train from earlier this morning, but no, you're not.
I just changed something. Tell me if this is better. Any better now?
Well, let me kind of review what I think you were saying. Is basically we have a situation where the Fed is talking about tapering, but they really haven't done it yet, and the market is already pricing in tapering. Now the question here is, if we're seeing China and Europe start to improve somewhat economically, will that be enough to override any tapering that does occur? And does that mean also that the U.S. may also start to improve? You know, you can debate these all you want, I suppose. The one thing I'm kind of watching for here is, to me, the market seems to be pricing in a tapering, and we've seen that, you know, with the break in the indexes. Last week, you had the gap down, kind of came out of nowhere, and you saw bonds get smashed. But they're trying to bounce today. You notice the TLT, which is a 20-year Treasury bond fund, 20-year plus rather, I should point that out, trying to turn today, but it's been making lower lows and got smacked last week. So bonds really have been coming down for a while. And so, you know, the bottom line here is the market is priced in tapering. Now let's think about something here. I like to play what ifs, and one what if would be, what if the market's priced in tapering and it doesn't occur? And the Fed, you know, while they job on a lot about tapering and blah blah blah, they don't do much. Like they go from 85 billion to 70 billion. And so what happens then? How does the market adjust? what's exactly going to be the response of the market. And so there's always that wild card. And I think what that does, as Dr. K was saying, the schizophedic market now is just kind of bouncing around and reacting to whatever Fed heads say, and ultimately it may be when they do something that you see a more decisive move in terms of what the market's going to do. So, I think it's tricky, and I think what this sort of argues for right now is a kind of reverting, and what I find myself doing is reverting from treating the market as a stock market and just watching stocks and trading them on a somewhat short-term basis, because some stocks are acting well and some stocks are flashing buy points and bouncing off of support levels. What I've noticed that in this environment, the 20-day moving average, and I've been talking about this in the chat room as well, but I use, after futzing around for a long time with the 17-day, 19-day, 20-day, 21-day, 22, you name it, simple and exponential moving averages, I sort of settled on using a 20-day exponential, which is what I have on this daily chart. And what I've noticed is stocks, it's like they don't follow the rules anymore, because if this is a viable gap up, this thing failed here on this day, LinkedIn did, and so if you're using rules, you're blowing the thing out. You're following your rules on this viable gap up and blowing the thing out. But here's the interesting thing: is that you do get some support at the 20-day moving average, and the turkey turns around and goes higher. And this is maddening, because if you're following the rules as we know them, then you're out of the stock, and now here it is turning right back up towards the highs and coming up through the 10-day moving average. You're not getting any buy points here, but I would say that a potential tradable buy point occurred at the 20-day moving average, and you can play it for whatever you think it's worth. $8, $9, $10, several percent, whatever, and see how it goes. But you're kind of V-shaping now. Are you going to head out to new highs, or are you going to hit the top here and then come off again and build a base? Who knows? That's probably going to depend on the general market environment, which I think is probably going to remain choppy. It's easy. I suppose, in the old days, this sort of action, you get an outside reversal 3 days ago. I think that was on Wednesday. Volume's up, and you're getting whacked after this gap down, and you basically are in a bearish flag. This looks bad. On Wednesday, that looked bad, and you would sit there and say, there's no way in hell I'm going to buy anything on this day, because that doesn't look right. And even if you do have a stock acting well on Wednesday, if the market gets hit again, chances are they're going to start to drag even the things that are acting well down. And so you get a little bit of a conundrum going here, because you do see some leading stocks act well, and here comes the index, filling the gap on the upside, or at least trying to. Maybe it goes up a little bit more, but moving back up, and volume is picking up today, but you gapped up, and you're actually, on the Nasdaq, you're lower than where you gapped up. That's why my bar is red. I just color code these that way, close versus open, so that I can get a sense of whether we're reversing or whether the market's showing that it's gapping up and then just kind of futzing out a little bit. And you're sort of getting that. But there are some stocks acting well, and I think those are tradable things, and we've been talking about some of them on the chat room. We were in there on Facebook at 38. You got a 620 buy coming up through the 10 days, so we were looking at that, and I know some people bought. Now it's coming out, and you're getting a pocket pivot breakout, which is viable. You can buy it. You'd be more comfortable if we were in a nice uptrending market and the market wasn't necessarily in a correction per se, but maybe it's just in another one of these funky times where it comes off, looks ugly, and then it just kind of futzes its way back up to the highs and then draws everybody back in, and then like it did last time, and you break out and then you break down, and you're getting whipsawed all over the place, and you buy stocks, you get stopped out here when the market breaks, and then they turn around when the market turns. So it's pretty tough in here, I think. But if you're playing a short-term sort of strategy here on some of these, and I like to use a 20-day. I've noticed, and this goes back many years, that whoops, what am I doing here? I don't want this chart. Get this one out of here. Let's bring up this. This is what I want. A 20-day moving average, stock that's moving, a lot of times the market corrects a little bit, and you'll see them pull down to the 20-day moving average. Sometimes that can be a buy point, especially if the stock doesn't tend to hold the 10-day. I guess LinkedIn is trying to along here. I don't know if that's long enough, but in any case, you pull down to the 20-day. I kind of look at these things as potentially being viable, and I'll try and trade it. I may not get a lot out of them, maybe a few bucks, or maybe they just go out without you. But you also can see Tesla does the same thing right up the 20-day. And of course, it has a viable gap up, and it fails almost immediately. So, if you're buying on that, you have to sell. You really have to, because you're 150% above the 200-day moving average, and this thing could start coming down pretty hard. Next thing you know, you're down 10 or 15 or even 20% on the position. So, you really cannot sit around, especially if the market's trying to pull off, because you don't know what's going to happen. And that's just kind of the situation you're faced with. So, some people mentioning a few questions here. MDM, add to shorts. Dr. K, would you be adding to your, what is it that you like here, the EEV? Would you be adding to it here?
It's a matter of your risk tolerance levels. Position time positioning is entirely and everybody has to be very familiar with what their trading style is, so that they know how to trade a position that is winning. Never average down, but if you have a profit, you might want to add to position. There's nothing wrong with that. You can use something very simple, like saying every time my position goes up X%, I'm going to add a certain number of shares. And I would encourage you to go and backtest any idea you have to see real, simulated trades and how they would have done, and that would have been in agreement with your trading personality. And then you can create a set of rules that hopefully will work in real time.
Okay, so basically you're saying you could. It depends on your risk tolerance. So this is the day of the buy or the sell signal rather, and it kind of hung out the EEV and then took off the next day. So you had a nice big upside move on Wednesday when the Fed minutes came out, and then of course now you're trickling back in as the market continues to rally. I would say that if you entered on the day of the signal, and I believe that signal came before the opening or right about the opening, stock, this one never traded above 25.64 on the day. So, right now you're trading 25.21, so you're 45 cents, less than 2% below the entry point. So, to me, it doesn't seem, like it's the end of the world. And if the market does roll over, which is a possibility, it may end up being successful. But for it to result in huge profits, you're going to need to see this market blow apart and come off pretty hard from the week or the Wednesday levels. And so, is that going to happen? I don't know. You could just futz around and go nowhere. So, as I said, I prefer to focus on stocks and be opportunistic and pay less attention to what the stupid indexes are doing, because it just seems they're there to screw you up. And be a little bit thinking, trade the trader, something we talk about in the chat room all the time. What is everybody doing? What is everybody thinking? When can you go the opposite way and perhaps make some money being opportunistic? And I guess that's the way I look at it. And everybody knows I trade pretty large positions. So, if I do see a LinkedIn coming into the 20-day and I'm just going big right there, and if it holds up, maybe I'll hold part of the position and run it up. If it runs into the 10-day, I'll sell it. If it's able to get back up through the 10-day, I'll buy it back. And just trade things around like that, and that's a very, I guess, for lack of a better word, maniacal way to approach the market. But in a sense, this is a maniacal market, and so from my perspective, it requires a sort of unorthodox view of what's going on, because it seems to me that if you're just applying rote rules that apply to the markets prior to QE, or even in the early phases of QE, because the markets acted pretty well in 09. And 10, maybe through 11, but the last couple of years it's been a little screwy, and I think the market direction model is some evidence this has been less effective as you've been moving through 2012 and 2013. So you kind of know what game you're playing, I think, at this point, and what's going to drive the markets back to a normal sort of way of trading, and I guess that's just going to be a big old correction and a reduction or the end of QE. And when does that happen? Who the hell knows? I don't know. So in the meantime, I like being opportunistic and trading the market not as a stock market, but as a market of stocks. And as you all know, that's one of my favorite approaches, and one that I've implemented several times, over the last several months and talked about it. Let's see. Some other questions. Gil, glad to see you are back to full recovery strength. Yeah, I am actually, and you can probably tell by the sound of my voice. had my follow-up visit to the doctor yesterday. They took everything out. They took out the staples, and I'm basically back to better than normal and better than I was before I had the surgery. And recovery in record time. I have to say, doctor's a little surprised after 1 week coming back, and hey, you're all better. And but you know, I think that experiment we did before I went in surgery a couple of Mondays ago, that was August the 12th, with everybody firing me all their good thoughts and other wonderful psychomental things. I think it worked, and so don't, you know, I'm not going to poo-poo any of that, and I think it worked. So got out of the hospital in less than 2 days when they told me I'd be in there at least 3. Wrong, and now I'm pretty much back to normal, and I'm a normal human being, not wearing any catheters or any other garbage like that. And I have to say, it is very interesting that, having put it out there, and you know, maybe some of you think it's TMI, but as far as I'm concerned, it's life and it's reality for most people anyways. Is I was amazed at how many guys out there emailed me to tell me about their own experience with their urinary tracts and their prostates and whatnot. So it seems like it's pretty common, and it brings up the question as to exactly why is it so common? You know, what's out there that's causing this among so many men these days? Or did everybody just have it before and they just died of it and they had no idea what it was? I don't know, but it's interesting that I got a lot of feedback from people. I do appreciate all of the thoughts and maybe the well wishes. It was really gratifying to see all the people, everyone out there sending me all that, and that was really helpful, I think, in my recovery. And I think you're seeing that today. Anyways, enough of that. Let's get back to the market. VRX, someone's asking about. I think the stock, you know, here you go. You have a stock pulling back to the 20-day. Now, the only thing I would say is that I like to see stocks when they hit the 20-day. I want to see them hit the 20-day and get some support off of there. This thing might futz around along the 20-day and try to come off, but you might try and pick up some shares here if you think the market's going to turn. If the market doesn't turn, all bets are off. But the thing here is you can buy it, and if it doesn't really hold up or act well, you can just blow out of it, and that's what I would do. And that's how I approach this if I do try to buy along the 10-day. I notice another one that's acting similarly, not the 10-day, the 20-day. Sorry about that. The 20-day on Trulia, you know, it had the Bible gap up, drops enough to blow you out, and bounces off the 10-day and then goes right back up to the highs. It's like, isn't that typical? And then here you come into the 20-day, you hang along it for a little bit, now you're kind of trapped in here. I think there's some short interest in here. I don't know how much, but it seems like...
So it's 13.4 days.
What's that, Dr. K?
Days volume. 4,
kind of breaking up.
First day's volume short. 13.4 days.
After
about 13 days on the short.
Yeah, but look at
exactly.
Here's a weekly chart, and what you're noticing here is you're kind of up and in a flag, and maybe you get a tight close today, and it looks okay, but you know, it is a very volatile stock. But my point here simply is that some of these things will hang on the 20-day, maybe they'll try and go up. But what I would rather see, Dr. K, I was thinking if you have any comments, you can IM me on G-Chat, and I can throw those up there or talk.
Okay.
About you are still breaking up.
Fine.
Not sure what it is. So okay, very good. There he is. You can see him down there. So you'll see him make some comments down here in the corner down here. So I don't know if you guys see that or not. But anyways, let's see here. Let's go to some more names. OCR. I noticed OCR Omnicare. I think that is. Yeah, having a pocket pivot today off the 10-day moving average. So if you like that stock, that's a buy point. If you think the market's okay and we're just going to screw everybody up and head right back for the highs because there isn't going to really be any tapering. You know, we had some pretty weak housing starts this morning, and that may keep the Fed on hold as well. So I think that, yeah, it's a possibility. So if you're seeing buy signals, you probably can act on them. I know Q-Core was a great one. You had this little pocket pivot sort of gap thing. It started out as a possible Bible gap up, but the volume petered out, but it was enough for a pocket pivot 3 days ago. Now here's a stock moving higher. We did mention this morning in the pre-market pulse. Bump, 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 bump. Anyways, let's see. Dr. K says tapering should start September, October, December based on Fed minutes, and world economies seem to be gaining some traction. Yes, so you got this little bit of a tug of war going on, I think. Is the world economy going to turn here and things improve enough to help the market drive higher? I don't know. We'll see. Right. Someone also asked, and this is what I was talking about, you know, what if the market discounts or prices in a taper and it doesn't occur, then what? Do we blast off to the upside? The one thing I noticed I think is very interesting, and Dr. K touched on this in with some of his warbled comments earlier, is GLD. It looks to me like you're headed. Let's see, what are you trading right now in terms of volume? 95.11, 9,000,005, basically a little over that right now. And you need to trade higher than this bar for sort of a pocket pivot move. But let's see, that would be 10,723,260. So I don't know if you'd call it a pocket pivot. It is a little range breakout. But you notice moving higher, and gold futures up 26 bucks right now. So the gold is working, and this pocket pivot here is working so much. So what would indicate that, Dr. K? The market moving higher in the face of tapering?
Question. If the market goes higher in the face of tapering, that's strong. The world are in serious traction, and that would certainly be a green light, I think.
So that could be a green light for the markets, or for you're still breaking up a little bit. Green light for the markets. Okay, I like that. I think if you talk that way, I don't know if people can see his IMs down there on the right side. Dr. K is playing max headroom today. Someone asked that. Okay, so I think we have that down there. That can help, Dr. K, because the way I have you configured on my screen, there we go. A little googly-eyed smile there. That's actually what Dr. K looks like after he's had several martinis. So, the geek glasses smile, as he says. Anyways, that looks like something scary. Anyways, let's see. Blah blah blah. How much room do you give at the 20-day moving average, like LinkedIn? You know what? I kind of play this by ear. It's like if it hits a 20-day, and a lot of times they just bounce right off of it. And the reason I settled on the 20-day exponentials, that seems to be where most of them will bounce off of the 20-day exponential moving average. Now, what you could do if you're not too comfortable with that, you could have a 20-day exponential, a 20-day simple, 17-day exponential, a 22-day exponential, a 22-day simple, 17-day simple, and you could have 6 charts, daily charts on your screen, and so you could watch them all at the same time and see which one it bounces off of. That makes you feel better. But maybe 1 or 2% maximum on the downside is all I would give these things, and when that happens, so I don't want to see it really break down too far down below. I would say, let's say I bought. If I got right at the 20-day, which is 221.84, I'm thinking 220 might be the max, so like a couple of 1 or 2%, not much. Because remember, I'm coming in with a heavy position, and it's got to move, it's got to bounce. And it seems like when things look ugliest in this market, you do get some bounces. But I still think they're mostly tradable type bounces. I don't know. I have a hard time believing this thing's going to V out of here, but maybe it is. I'm long it right now, but I'm not sure. Whether I'm going to stay long or what going over the weekend, I'm just not really sure. Could run into the resistance, go sideways a little bit, and then go higher. But it does confound you, and I think that's just the nature of this market. And I think we were talking on the chat room. There are some people down 50% for the year, and I want to point out, a lot of people think it's a magic system. We were talking about this on the chat room this morning. It's a magic way of making money, and it works all the time. But I've seen a lot of people get their heads handed to them, especially people first learning it and not really understanding what they're dealing with. The stocks you're dealing with are very volatile, and I think you have to be careful, because even something that's acting very well going into earnings like Cree, and I'm blown away by Cree, its reaction to earnings based on the fact that the earnings report wasn't all that bad. Okay, maybe coming down 10% I could see, but this thing got hammered. What did this come off, Dr. K? You can IM it, or it's actually now 25% off of its high, off of the high of this day, the day of earnings, and that's just brutal. And if you had the stock, and let's say you bought it in here, or one of these pocket pivots somewhere in here, this little breakout thing here, and you're up, you bought it, say at 71, 72, 73, somewhere in there, and you're up 5%, you're thinking, okay, this thing, if it gets hit, it's going to drop 10%, maybe 7, 8%, and I'll be down. I can handle that. And no, that's not what happens. They kill the thing, and it gets raked for, I think that was about a 15% drop on the first day after earnings, and it continues lower. And now you have a situation, let's look at this on a weekly chart, where I think you have a left shoulder, you have a head now. I'm thinking, and we've been talking about this as short in the chat room, it was this morning, you could use a 620 chart on it, because it rallied up to 58, roughly. I think the high was 57.95, and then you got a 620 sell. Let's take a look at this. Let's go to Cree. First Solar was another one. Fizzler, as I like to call it now. Here you had it pretty much right off the opening, so pretty much right 15 minutes after the opening, boom. And you even could have hit it a little early because to me it's suspect. It looks to me like it's a bear flag and it wants to go lower, and it's probably going to hit the. Let's see. Can I find the 200-day in here? Here's the 200-day down at 51.15. It looks to me like it wants to head for the 200-day, but I think a lot of that's going to depend on what the general market does. So, I think that's a good trade, and it might break there. If you want to have a short in there, just use a high of this range as your stop. You notice it didn't go higher than yesterday's high today, so you've been in these lower sort of downward trending resistance here. But I think what you look at this as, you now made the left shoulder and the head. So logically, you like to see, if this is really weak, you'd like to see a lean-to formation. In other words, you want to see the neckline kind of go, downward ascending or descending. A new redundant phrase, downward ascending. But in any case, you bounce off the 200-day and you set up the right shoulder. So that's, you try to figure out how these might work, and that's one scenario I see for Cree. But it's looking pretty butt ugly right now. So the question is whether it continues lower. There's always the possibility that it forms a flat neckline, in which case it would find support here and try to bounce. And I think that is going to depend on what the general market does. And so that's what you want to watch for. First Solar is another one. You could have hit this one this morning. Let's see. Right up the bat, they opened it up this morning close to 40. I saw it trading right up there, 39.80, and then boom, there it goes. And this one's weak too. This is a late-stage failed base here. Fails immediately, gaps down on earnings, but you're finding some support. You found some support rather along the 200-day moving average. So, but still, I think the 40 level becomes resistance, and so that's the way that worked out today. And its volume is picking up just a little bit versus yesterday. It looks like it'll close slightly higher than yesterday, and just bust in here. So. So you can play the market either as a stock market or a market of stocks. I think that I see trades on the long and the short side. I just don't know how long the duration is for those trades in either direction. So it's kind of like take what you can get and move along, and we'll see where the market goes. If the market tiptoes higher, and you can enter some positions, and you're taking core positions, say not huge positions, and you can probably try and sit with them. Facebook has worked out pretty well over the last couple of days that way, but it's still danger because the market gets into trouble. How do you know you don't run into another gap down like you did this past Wednesday? So that's things you have to think about, and it's why I don't really carry much overnight. So I'm a day trader. Anyways, that's pretty much the drill on that one. Let's see, more questions. ARMH, ARM Holdings, and this was a short, and this is what I call a little stubborn short, because what you're seeing here is you got the classic pattern, okay? So you got the pattern you're looking for, and it's like, okay, great, this is wonderful, it's perfect, look at that. You got the big break along the right side, that's your head, and it's, you can draw a line like, let's see, like this. Where are we? Where's my little pencil? There we go. I don't know, let's do this. Oh, you can, it's got the descending neckline, or the downward ascending neckline is the new word I've given it. And so this thing's going to blow apart because you get a nice big reversal. But of course, even the market, even with the market being weak, this thing does not want to break down. So it's driving you nuts. Okay, you just short it in here. It's like, okay, this thing's done. Look, you even have the black cross, the 10-week moving average, the blue line moving below the 40-week on the weekly chart, and that coincides with the 50-day dropping below the 200-day, but it doesn't want to break. It's just kind of futzing along and going sideways. And this is relatively typical for the patterns that look too almost textbook. So I think in this case, what you've got going on right now looks like just a series of weekly rallies. Notice he's stalling in here. This might take more time to roll over, but again, I think it's going to be a function of the general market environment, and we'll just see where that goes from here. Let's see. Now you guys stop making fun of Dr. K's internet connection. He doesn't use dial-up, okay? He doesn't. I don't even think he has a phone anymore. At least not a landline. Blah, blah, blah. You know what? I actually.
My modem.
What's that? 300 meg modem. You can text or IM that. There we go. Using my Hayes 300. Yeah, really. You remember the days when we used to get 2400 baud? And everybody thought that was like, lightning speeds back then. Yeah, I'm dating myself. I know that. Let's see. But I think I already dated myself with all the disclosures about my medical condition. In any case, TRIP. What do you think of TRIP? TRIP sucks. You want the short story. You got a stock here that was looking great, and then kaboom, they busted it wide open. You got a Bible gap up. It's still holding the Bible gap up. But in my view, you get this kind of a huge break like that, and if you bought the day of the bond, I'd just be gone. I wouldn't even sit around. Maybe it does turn around and go higher, but it sure looks like a piece of garbage. Actually, it looks like a piece of bio-waste. So if you've ever been in the hospital, you see a lot of the bio-waste around the place, and let me tell you, that stuff looks scary. Let's see, TRIP, okay. Let's see, Dr. K, please provide any relevant insight into the Eurozone. Well, he did say that he thinks things could be improving there, and that's a possibility. But I don't think, is Europe hot and bothered, Dr. K? Are you like seeing, the economy? Germany has increasing evidence they are turning the corner, Dr. K says. And the question is whether this is sustainable. And yeah, that's perfectly intelligent answer, as one Fed member mentioned. Yeah, is any of it sustainable? What is it all built on? Is it all built on QE? If so, I'd say we're kind of up a creek without a paddle. But I guess we'll find out. And in the meantime, the market is just what the market is, which is living in Funky Town right now and trying to cross you up. But you do have these leading stocks. Some people in the chat room have referred to Tesla, LinkedIn, Netflix, and Facebook as the 4 horsemen. Why is it always the 4 horsemen? Why can't it be the 5 horsemen or the 2 horsemen? Or why does it have to be horsemen? I don't know. In any case, let's see, more questions. I want to see some more questions. I'm going to go through some stocks. Go through silver. Let's look at silver. Silver, like gold, there is a little pocket pivot move. So I don't know if anybody can hear my iPhone. Somebody's trying to text me. Give me 1 second here. But silver looks to me like it's heading higher. Oh, give me 1 second here. It looks like my wife is picking me up some sushi for lunch, so I gotta tell her what I want. See, that's what everybody needs. Okay. I'll go with the spicy tuna rolls, not the regular. Anyways, where were we? Outside day on Double L. Yes, Double L looking good, and probably didn't like the new housing starts today, and that's probably what's turning these around. We were looking at it in the chat room, and I love when someone comes at me with something because it tells me they're getting the gist of it all. You can see here, this thing had a big gap up here, and of course that failed, but the stock, it's a thinner stock, and it's entitled to be a little funky because it did have a big move here on the weekly chart. Now it's sort of rounding out this cup. You notice right here, though, you get a little bottom fishing type of pocket pivot move coming up to the 10-day off the lows. You're well above the 200-day, but you're just below the 50-day. So it's not one of your better ones, but if you see them coming up above the 50 and the 10-day, that's better. But you notice it's trying to round out the lows of a base. So you could have bought it at the 10-day this morning, and it's holding up. It's doing a lot better than Double L, which is coming in, but I don't think the volume is all that heavy. Maybe it's a buying opportunity. It's running 27% below average right now, so not really the end of the world. But it's still, you know, it's up there. And again, this is just such a difficult market. And it's so frustrating at times. You know, Dr. K, do you find it frustrating at all? You can just IM yes or no. He's thinking about it. Dr. K, do you want the spicy tuna rolls or the regular ones? Most in decades. Yeah, I mean, it's messed up. And, you know, I was talking earlier on the chat room, I think I was looking at all my trades as possible. I wouldn't be doing nearly as well. I probably might even be down for the year if I hadn't had a few key trades in stocks. Like Triple D was a key trade coming up, you know, off of these lows. And where did the move really occur? It's like, okay, what just happened here? How did I do that? I made that thing stretch out. I got to figure that one out. But anyways, here's the pocket pivot. Gave you a chance to buy the next day, and then boom, there's the move. And ever since then, nothing. Okay. And that was one. Of course, Tesla has been, you know, was the big one. But of course, Tesla will confound you because I thought I was smart selling up right around here before it broke. And then, of course, when it does that, you're sort of forced out. But they bounce it right off of the top of the prior base, and that also came right off of the 10-week moving average. But you know, crazy stock and still moving higher, 161.22 after shaking everybody out. So it's, you know, a few key trades, and I think if I had missed a couple or three of these, could easily be down for the year. And it's just been that kind of a year. But you know, you got to play them heavy and play them right. I think if you're going to make big money, you might be up a few percent if you got a few of the right stocks, but and if you have a broad portfolio and you're pyramiding, half of them can go up, the other half can round trip or go lower. So, and a number of you agree with your IMs coming in. COG, Cabot Oil and Gas, viable gap up, fails. Then it turns around, you get a pocket pivot yesterday, but it's, you know, it's an oil stock, and this is how exciting it is. It's a base on a base on a base now. And, or is this a base? Yeah, base on a base. Base on a base on a base. Yeah, okay. And you're just hanging out along the 10-week line. Let's see. We have some comments from Dr. K. Let's see what they are. Dr. K goes for the spicy tuna rolls, too. They might be a little stale by the time we get them shipped out to you, but hey, nothing like sushi rolls from the PD Ray sushi bar. It's a place where we like to go and see how much of a bill we can run up. Which, you know, I think about it, it's kind of a dumb thing, but whatever, how you entertain yourselves. Anyways, trend-following wizards severely lagging the general market since 2011. First in their careers for them to lag this long. So if anybody follows the so-called trend-following wizards, there's a bunch of market timers that have models based on the market trend and determining the market trend and then riding them. You know, there's... who's Bill? What's his name? The guy, Bill, somebody who has regular 50% drawdowns and then will run up 200, 300% to make up for it. But a lot of these guys using their models have just been confounded as well by the market. And you see the way it acts, and it makes perfect sense to me. So I think that that's just what you're dealing with. It's that type of market. So you've got to be opportunistic. And you got to be in the chat room as far as I'm concerned, because that's where a lot of some good ideas and morning trading ideas come up. Is Microsoft meeting the parameters for a short? Well, I don't really see how. I mean, it's breaking down and it's breaking back up. I guess the whole jack in the futures this morning was all dependent on Microsoft, and the move in Microsoft is entirely dependent on Steve Ballmer retiring. Okay, I can, you know, I can buy into that one, I guess. You know, I never really did like his no hair look. And I always thought he was kind of goofy, but you know, Microsoft I think is a goofy company, and anybody who uses their products knows that. I mean, what company, you know, has something like the blue screen of death as sort of a derisive icon the way that they do, and you know, you got to wait for everything. It takes forever for a Windows PC to boot up. Both of my kids have Apple laptops, and the new Mac Airs, I guess they're called, Airbooks or MacBook Airs or whatever. But those things come up in like 5 seconds, and they laugh at me. And then I tell them, just wait till you want a new one and see who pays for it. In any case, is it negative that DDD is stuck in a base while SSYS? I don't think so. You know, the last earnings report they missed. Okay, and they missed. Whereas, you know, something like Cree did not miss. They came in pretty much even with what was expected, but they blow that thing apart. Now, DDD comes down, bounces around the 50-day moving average. It's holding along the 10-week moving average. I think it's setting up to go higher. If the market is able to find its feet and turn and go higher, I think it's going higher. And I think the action here, you get a light volume pullback. Today, I'm buying into that move. I bought some, and we'll see what happens with that. I probably will hold it over the weekend. It looks okay. But you're noticing the sellers are drawing up. And I noticed also, if we go and check, let's take a look at, let's go on a browser here. Let's look at the Nasdaq website. Oh no, the Nasdaq website is down. It's frozen. Maybe it doesn't want to do that. Let's go. Where's the Nasdaq? Here we go. That's a first, says Dr. K. Quotes and research. Short interest. And let's go with go now. I already got my list up there. Tesla. Notice just as of the end of the month, we should be getting the new numbers out any day. Actually, and today is the 20th, so it's probably at the 20th. Probably Monday, I'd be looking for the new short sale numbers. But let's look at 3D. Wow, fast. Now, see, now I think their website is kind of going on the fritz. Triple D, 26 million shares short at the end of the month. I'm going to guess that there are probably more. So let's see if this is true. By the time they put out the 8/15 numbers for August 15th, I'm going to guess that you're going to see more shares short because everybody's, it's crazy, and 3D printing is a fad. I don't really think it is. I think it's what do they call that? Not game-changing, but disruptive technology. So, what's a first, Dr. K? You're saying that's a first, just like the internet. You might try talking, see if your thing works.
The Nasdaq.
Oh, yeah. It's slow, just like the internet. I get it. Okay. And you're warbling, like perfect prop for that. I thought. Facebook moving higher. I'm just watching it. But anyways, check these numbers out when they come out in the next few days. I think if you go here, mid-month and end-of-month settlement dates, you can see when they're reported. So this is the schedule. So August, the mid-month is supposed to be reported, they say, on 8/26. So that is going to be Monday. So, see, I guessed right. But I've been watching this for a long time, so I know. Anyways, get out of here. Where are we? Any concerns about late-stage base? Maybe it is, maybe it isn't. I did notice one thing. It reminds me a little bit, if you go way back, let's go to First Solar, way back to 2008. And it formed this cup and then this long handle that went on forever. And it was acting like it wanted to go higher a few times. But up and down in here. And not as tight along the 50-day moving average as 3D is say. But then I noticed that one failed. So if you look at Triple D today, it's sort of the same kind of thing going on. You have this cup and then this long handle, and it's above the peak of the left side of the cup. But it is showing a little more support and tightness along the 10-week line. So in my view, the jury is kind of out on this one, and I think it looks okay. And I would say, what's going to drive you out if you do buy into the stock here? Probably a breakdown through the 50-day. Now, it's violated it intraday here. It violated it here. Violated intraday. No, it didn't violate it. You only have a couple of violations. So it hasn't really violated the 50-day moving average yet. And it has closed on a weekly basis above the 10-week line for 6 out of the last 7 weeks. I'm assuming it's going to do that today. I mean, I think that's kind of a no-brainer. But it might be late stage, but you can't. Everybody wants to slap a label on things, and what is it is. For instance, what was somebody asking me about some base? But is Netflix another pocket pivot? Well, who cares? I already had a couple of pocket pivots. Netflix had a pocket pivot in here, had a pocket pivot last Friday, right here. And broke out 4 days ago. It's trying to go higher. My guess you'll see it pull in. It's kind of the way it acts. But I would say on a late stage base, all you're looking for is for it to fail, and then you know it's a late stage base. And I think that would coincide with the market coming off. So you don't have to try and slap a label on it. For all you know, it's setting up in a new base, it's putting in enough time to go higher if the market goes higher, and so it could work. You don't know. Just go with the action right now. But for my money, I'm just buying a little bit here along the. Let's pull up that daily chart. Along here, the 10-day volume's drying up. It's a pretty extreme dry up. I don't think it's probably, if we hold here, we got another hour and 15 minutes to go. If we hold in here, that's probably the lightest volume you've seen in the pattern throughout this base. So my guess is if it's going to hold and go higher from here, this is it. This is where it's going to happen. Somebody says, I think the move on Microsoft is investors speculating a rational CEO will break the company up, releasing a lot of hidden value from the parts that have growing earnings, i.e. Xbox. I think that's a good point. That's a possibility. Let's look at some other stocks people are interested in. ALNY. Stock has not had any buy points here. I think you might have had a... no, that didn't qualify here. No real pocket pivots in the pattern. But it's acting well. It's coming out of this little flag formation, but no volume. So be careful there. It's also, I think, a no earnings sort of biotech. Is that right? I also know this thing got killed. They make insulin. I know that much. So I remember when I was at O'Neill, there was a guy there who was using it as part of his regimen. You remember Don, right, Dr. K? Random Don.
Sure.
Yeah. Anyways, let's see. GSVC. I'm going to go through some names here since we got about 13 minutes left. GSVC is running up, so you had like a pocket pivot move here off of the 10-day moving average. What is this? What is this? It is a finance investment
venture capital.
Oh, I don't know. I mean, if you bought the pocket pivot and you like it, but it trades, 300,000 shares a day.
250 million. It's a micro cap.
It's too small. But if you bought it and you're making money on it, just figure out when you're going to take your profits.
Highly speculative. If you've made money on it, don't get greedy. Very speculative.
I'm with you there, Dr. K. The wisdom of Dr. K. We'd like to see more of that wisdom on the chat room there, Dr. K. I think everybody's like waiting for you to go on, and then the two of us can get into an argument or something, like a cat fight. we don't really do that, you guys. I like to give Dr. K a bad time, but the bottom line is we're probably really good friends, I guess, right, Dr. K? Something like that. Anyways.
Yeah, friends, family. I mean, I don't distinguish you between a friend and a brother.
Oh,
so
no.
it gives me a
Well,
right
as long as you don't distinguish me between a friend and a sister, I'm okay with that.
Not until the sex change, I suppose.
No, I know. I was making sure when I went into surgery and they take you into the room, it's like, okay, everybody, let's do a double check. What are we doing here? Who am I? What is the procedure? Everybody tell me they know what the hell is going on here. And believe it or not, the hospital I was at, St. John's, that is actually their procedure. They do a timeout, so they call timeout just before you're going to go under, and the whole team, the whole surgical team, they go through who's the patient, what's wrong with the patient, what are we doing here, blah, 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 and they go through the whole thing. And I think that's really good because back when I was 20 years old and I was at Stanford Hospital having a detached retina repaired at Stanford Hospital, which is one of the best hospitals in the country, that's where the first heart transplant was, and this is in 1980. They wheeled me into the surgery room and get me all prepped up, and they're ready to go. And then I hear one of the guys says, "Hey, wait a minute, this is the wrong patient." They wheeled me back out into the hallway, and I sat there for another 20 minutes. So that was a close call. Anyways, somebody asking about Taser, which has been lighting up. Nice pun. What is up with Taser? Is the government buying a bunch of these? You had a pocket pivot move here, but again, cheap stock. But it's working, so I can't buy it now, though. It's extended. Gil had a section. No, I didn't. I had a simple prostatectomy, something like that. St. John's a great hospital, yeah, and they're building it. It's really nice. It has a nice atrium. But you know what? I don't care how nice the hospital is. Being in a hospital sucks. Okay, being stuck in a hospital. I remember the Wednesday morning walk. You have to walk around to like loosen up apparently, and that's what they want you doing. So for your pulmonary, whatever, it's a system working well. So I'm walking around and then I'm trying to find open windows so I can get in some sunshine because the things are cold as hell. Anyways, Yandex holding up in a in a base right now. So you got 3-week base. I don't know. I guess you call that, what would you call that? Trying to make a high. So I don't know. It's had a nice move. It's going sideways. Look out for a pocket pivot if you see it. I don't know. I guess you'd call that a pocket pivot, but it didn't really work. Someone says all reputable ORs do timeout now. So a new camera on the taser. That's cool. So you can record videos of people you're tasing. I like that. I bet that would be great stuff for YouTube. Like, here I am tasing my little brother on video. That would probably get a lot of hits, I guess. Look at Triple D's moving. What do you guys all buying these things? Anyways, camera for police department on the office. Ah, I see. To make sure that they're behaving themselves. Let's see. Any other exciting questions? Let's see. I'm going to go through some stuff that I've been looking at, and I got to get to the stock that I just cannot stand anymore. InventSense, shakes you out. I set pretty tight stops on some of these. If they break down below the breakout point, I'm just gone. I don't care for much of that sort of garbage. And of course, the thing, bops around, it's all over the place, and now it's drifting back up. It's trying to form a base, but notice how it's wide and loose. So I don't really care for this. I know, Dr. K, this is one of your favorite stocks in terms of the technology, but there are other companies doing things with motion sensor chips and having other technologies. So there is potentially a lot of competition. So, and yeah, not ready yet because of long choppy base. So we both agree on that. But I'm wondering if maybe it is a very dynamic field, and you notice, I think Google today applied for some, I don't know, patents on wearable devices, and so I guess that's where it's going. And you got to ask yourself, like, I guess you could say cynically, oh, if you're going to create a watch-sized computer, how are you going where are you going to put the keyboard? And you'd have to think that these are not going to be devices that use keyboards. They're going to use gestures. And for that, you're going to need motion sensor technology. And I noticed there are a lot of companies doing a lot of work in this field. And so they could overshadow what InventSense is doing. And we all know that technology, stocks can be in favor one minute and then they're out of favor the next. Ambarella, a stock that was choppy all the way up, kind of like InventSense is now. But it would drive you out and then go higher. Do that over and over. Drive you out, go higher. Drive you out, go higher. And that's kind of like what InventSense does. And then finally, goodbye. I was done. And I was happy to see when that finally happened. I hated this stock, but it's still wide and loose. InventSense may be a little bit tighter, but I think that's what's going on there. So I'm not really interested in it, and I don't really care for it anymore. So yeah, maybe that means it's going up a lot. Anyways, Gigamon thin stock, right at the 20-day. So I think being at a thin stock, they had great numbers. I think the problem with Gigamon is that it is a big stock story that acts like a small stock. It trades 321,000 shares a day. That's very thin. My maximum minimum is, that sounds good too, another term. My max min, the most, or let's say the least number of shares I'm willing to venture into is like 350,000. And even that is very tough to run. And so, you can't, I think if you can trade 500,000 shares of this thing and that's what your position is going to be, I think you are okay. But other than that, I just don't like this sort of thinness. And it was ignoring the market a few days ago, and now it's pulling into the 20-day. Maybe you can step in. I think something like this, you got to try and buy on weakness. But if it keeps going down fast, it's thin. You're going to get stuck. Let's see, DATA. Data. I never liked Data. Another thin stock, trades less than a couple 100,000 shares a day. They gap it up, it fails. So, I talk about these all the time, and I think, people have asked about. I think it was a Pandora. Pandora's a pretty decent trading stock, but I just thought it was kind of too small and kind of junky. There was another one that I didn't like. Oh yeah, this one, Light in the Box. I mean, cute name. Unfortunately, stocks don't go up on the basis of their name. And I think we talked about this last week, and I just said, I don't like this. Thin, crappy little Chinese stock. I don't like it. I don't need to own this. It's wonderful when it's moving higher But you really have to think about the risk. And when they announce earnings, kaboom! That thing's more than cut in half now. And that's why you go for big stocks. The big stock theory. And I think someone made a great point in the chat room the other day. Is that what are the big stocks that trade a lot of volume and they're easy to get in and out of if you have to, if something goes awry. Oh, I pronounced that right. Is that right, Dr. K? Awry, A-W-R-Y. Tesla, Facebook, Netflix, LinkedIn, even Triple D's is a big stock because it trades $3.3 million on a $48 million stock. That's over $100 million value a day. So that's what you're looking for. And I know people get enamored with these little junky stocks, but I got to tell you, when I first went to go work for Bill O'Neill, I used to buy little junky stocks like that. I used to love $17 stocks, and the reason is that way back in 1994, I bought MRV Communications at $6. I bought Datum at like $5, and there were a bunch of stocks I bought during 1994 at like $5, $6, $8. I remember Cyberonics was another one, or was it Cybertronics, something like that. Maybe some of you remember those, but I bought a bunch of them. I even went out to visit MRV Communications office, and I met with Noam Lotan and also Ed. I'm trying to remember his last name, but he actually he was a CFO. Noam Lotan, N-O-A-M, Lotan. You guys might have seen him, and he did IBD ads for a little while. But CEO of MRV, and then I think it's Ed Fisher or Ed somebody. But in any case, Ed actually was on the jet coming out of Boston on 9/11, and he was killed on 9/11. But anyways, I met with those guys, and I was into that as a Merrill broker. I'd go out and visit these companies and write up a report and then submit it to get approved to call clients to buy the stock. And so I made a lot of money with a lot of these stocks. And even MRVC at $16 set up in a base and took off again. And another thing at 95. And so I love these stocks, and they worked. In 95, I think you saw several of them work. But when I got to O'Neill, Bill O'Neill slapped me upside the head a few times and told me, you don't want to be buying these little teenage junky stocks. He says, you need to understand quality and price, and he pretty much beat that one into my head. And that's why I think today, you look for stocks that trade thickly. If a stock trades 200,000 or 300,000 shares, who's buying it? Probably small cap funds, and yeah, they buy a 0.5% position, and so they got to buy 10 or 20,000, and yeah, they're going to push it up for a little while, but it doesn't have the liquidity that tells you that institutions are really in there and really willing to commit big dollars. I mean, you look at a fund like Contra Fund, and you look at, say, Will Danoff. Will Danoff during Apple's heyday owned a 10%, 15% position in the stock. He had close to a 10% position in Google when it was having its move, and these are big stocks, and that's what you're looking for, big stocks. So all that is to say is light in the box, Tableau. That's kind of say, it's like, okay, if you want to buy, go ahead, but consider yourself warned. Anyways, so like all that's to get back to Gimo. And by the way, if you just threw an L in there, it'd be Gilmo, which would be great. I'd love it. Or maybe that's its problem. It's missing the magic L. It needs to be a 5-letter symbol. But holding the 20-day, if you want to try and buy it, I do think the story is a big stock story. The only problem is I would love to see it confirmed in it being a big stock, de facto. In other words, trading some freaking volume. Okay. Let's go DXCM. What's DXCM? Been watching the Bible gap up and acting very well. That's good. Keep watching. I guess did you buy it? If you bought it in here, you're doing okay. Otherwise, just kind of chopping around. Let me ask you a question, Dr. K. If you bought this Bible gap up and this stock has been doing this, what would your approach be here in terms of the 6-day rule? If it breaks down below here, you're gone immediately. Is that the only thing, or do you say, all right, this thing's had enough time, I'm gone?
Yeah, I mean, it's like any stock. If you buy a breakout or a pocket pivot and it's not keeping in pace with the uptrending market, I let it go, or at least reduce it by half to make room in my portfolio for something that looks better.
Okay.
Did that come in clear?
Yeah, it did, believe it or not.
Good.
I like this light in the box. Somebody's calling it junk in the box. That's good. I like that. That is what it is. Can you repeat that minimum average trading volume that you look at? Well, I just said 350,000 shares is probably the low end of what I would be looking at. But even then, it's too small. But again, everybody's asking. They love to ask, what's the minimum amount of shares that you needed to trade? it's like, forget that. Forget that whole concept. Like there's, well, if it's 350.278 thousand shares per day, that's acceptable. But if it's 349, whatever, it's not, and somehow that's a magic number. In the stock market, there really aren't any magic numbers. All you have to do, focus on stocks where you can get a sense of it being a big stock. And that's really the overriding principle. Ask yourself, is this a big stock? Are institutions trafficking in the stock? Get out of this noise, where, oh, well, what's the minimum number? And then you're going to look at the stock, oh, Gil or Dr. K said that's the minimum number, so that's okay, and then the thing blows up. Because it's not a big stock. And I think that's what you need to focus on more than the idea that it has to trade a certain number and there's some magic number. And there isn't. Magic numbers don't exist in the stock market, I don't think. If they do, let me know. But it's basically, I just adhere to the big stock principle. If something looks like it's either a big stock or becoming a big stock, then I'm interested, and you can tell by the volume. So finish off with a couple more symbols here. So I hope that's useful in terms of you guys understanding, where I'm coming from in terms of what the minimum volume size needs to be. I'm less interested in that. More interested in whether the stock is a big stock or not. Open table, broke out and sitting on its 10-day moving average. That's about it. I got nothing else to say about that. Let's see. Powie. Oh, I remember Powie. Power Integrations. Stock had a big move. It's trying to come up. It looks like it's on the verge of a pocket pivot today. Depends on what it's going to trade by the end of the day. So I guess we'll just have to see. But I don't. What's the story here? I know that they're using power conservation systems or something. I owned this stock back in like '98, I think. It had a little bit of a move. But if you go back to, oh gosh, I don't know if I can get back there. Yeah, let's see if we can do it. Do you remember this stock, Dr. K, Powie?
Yeah, sure do. It used to trade very cleanly.
I remember Dan coming into my office, and I think this was it. Was it? Yeah, it was late when it broke out here. Yeah, it was running up here. And I think we were buying it right here. So it would have been early '99. And he comes into my office and he says, aren't you afraid of this stock? Look at all the air underneath it. And I was trying to figure out, what are you talking about, Dan? I mean, any stock that's in an uptrend, the longer the uptrend, the more air. And I don't even know if that's what you see on the chart there is air as much as it's just white space. But, I guess I think he got scared out of the position at the time. But that's not to say Dan was probably one of the best
Which Dan?
Traders. Dan, who was next to Bill.
Well, Dan Morris, he was...
you're breaking up. He was a great trader, though. I mean, he had his moments like all of us, but he was a great trader. And I think he retired and, just trades his own money. So, $2 Charlie took Dan's place. Okay, yeah, that's Charles Harris. A great trader, but very short term. Yeah, but, I think Dan did very well. But anyways, I just remember, and I think that's why he got scared out of things. And I just remember the stock back then. And it had a nice move from this breakout. Here, where are you at today? Let's go, looking at the pattern. Let's go back. Whoops. We're going to finish up here real quick. You had a nice breakout. I wonder what the long-term pattern on this looks like. Yeah, it's trying to come out. So it's broken out of this long-term pattern. It's like a 3-year base, more than that. And it's holding in a nice, tight little flag here. So, it doesn't look too bad. Earnings were up 24% in the most recent quarter. So, that's not too bad. You're getting a little pocket pivot here today. I don't know. Maybe you could buy it, I suppose. Anyways, I think that's all we got today. But does the action in FB look like potential performance like Tesla? They're not really the same kind of stock. So, why? But is it the same kind of performance, meaning what? Facebook, this is just barely clearing the prior high. Facebook is beyond its high and well beyond its high. So actually, Facebook is acting better than Tesla. So Tesla really wants to act like Facebook, not the other way around. So yes, I think it's going to act just like Tesla, which means it's going to come right back closer to the peak here. No, it's just breaking out. You got a pocket pivot. It's had a pullback. It's breaking out. I'm long the stock. Acts okay. Anyways, last one. Yeah, because I was looking at this one, MELI. this is, I think, somewhat instructive because you're actually in a downtrend. You get a pocket pivot here, but the problem is you're in a downtrend, and so it's a little bit premature. You can go back and look at like Marley Corp back in 2011 when it had its big move, and it initially had some pocket pivots after a pullback like this, but then it had to go sideways a little bit. So I think that's the issue here. I wouldn't buy into this pocket pivot because it is coming off of a little V-shaped position and after a downtrend. Remember, they have to go sideways and quiet down, and this hasn't really quieted down yet. Tesla has moved 4 times. I doubt FB has a market cap of even $200 billion at this time. FB's market cap is
I said it was
173.57 billion is what I'm seeing.
Well, no, you read the whole thing I wrote. You just read the last comment.
All right, let me read the whole thing he wrote. Oh wait, never mind. FB unlikely to rocket like Tesla due to market cap. Well, Dr. K, I remember we had a little discussion over the Bible gap up, and your thinking was that it wasn't going to be able to do much from there, and it's up. It's up over 20%.
Yeah, but Tesla's gone up fourfold. Tesla's gone up fourfold. I mean, Facebook's valued at $100 billion right now, and I doubt it's just not it's right now, unless they have some killer thing down on the pipeline, they're not going to be a $400 billion company in 3 months. Tesla rocketed fourfold in a matter of a few months or less, and Facebook, no, it's just there's no way it's going to be at 400 billion unless we get another 99 on our hands.
Right, I understand that, but it seems to me that if you start overthinking market caps and what the market cap could be or couldn't be, then what happens is you don't buy this and you miss it. So why not just go with extreme? Go with the technical action. Why not just do that?
Well, I think it's a great stock to buy. However, the question was, is it going to be another Tesla? Is it going to rocket 4 times?
Right. No. Yeah, I'm with you there. I don't think
no.
Yeah, I'm with you there. I think maybe 45. That's my short-term target.
Market cap can get extreme, but the market conditions have to be right for extremes to take place.
Yeah, I understand what you're saying. Okay, got that cleared up. Anyways, you guys, that's all we got. It's 12:07, and yes, my sushi is here, so I'm gonna have some lunch now, and it is actually 12:07 p.m. my time. And I guess we'll catch you guys next week. We'll probably have it earlier in the week, maybe Thursday. But we kind of thought with the action here, it's a little bit what's going on here. It looks like they're trying to, let's go to the Nasdaq chart before we close up here. They're trying to close the gap here. We'll see what the market does from here. But some decent trades the last few days if you're taking a 2 or 3-day swing trade approach. And those have worked, but I don't know, where are you going from here? It's still a little bit tricky. I got to figure out in the next 52 minutes while I'm eating my sushi exactly what I'm going to do with the positions I have right now, which I'm making some money on, but even the shorts making some money on today, but I'm not sure whether I want to hold anything over the weekend, so we'll find out. But don't email me and ask me because that's a secret. Anyways, you guys, thanks for showing up, and again, thanks to everybody who was there for me mentally, psychologically, spiritually, whatever, energetically. I'm trying to make up a new word here because it worked. So log up another one or chalk up another one for the cosmic consciousness. All right, you guys, we'll catch you next week. Take care.
So long, everyone.